What if there was an investing platform that took the complexity out of long-term dividend growth, automating your strategy so you barely have to lift a finger? That's the promise of M1 Finance for dividend investors, and in this video, we'll dive into how M1's unique tools make it an absolute powerhouse for building passive income over the long haul. The power of pies and fractional shares. M1 is built around the concept of a pie, which is essentially your custom investment portfolio. Think of your entire portfolio as a large pie, and each individual stock or ETF, especially those juicy dividend payers, is a slice. You decide the percentage you want each slice to be. This visual, flexible structure is ideal for a dividend strategy because it lets you easily visualize your target allocation. You can include individual dividend-paying stocks, dividend growth ETFs, or even M1's pre-built expert pies focused on income. But here's where M1 is a game-changer for long-term compounding: fractional shares. Many high-quality dividend growth stocks have high share prices. Normally, you'd have to save up enough cash to buy a whole share. With M1, your money buys fractions of shares, ensuring every dollar you deposit is immediately put to work across your entire pie. This maximizes your compounding potential from day one, which is key to long-term success. Automating the dividend drip. The true engine of long-term dividend investing is compounding, which often means reinvesting your dividends. This is known as a dividend reinvestment plan, or DRIP. M1 takes the manual work out of this with its automated features, including the new M1 DRIP, Dividend Reinvestment Plan. When you earn a dividend, you can set a rule for how that cash is handled. You have choices. Reinvest in the underlying security. This is the classic DRIP. That dividend from your favorite stock automatically buys more shares of that specific stock, regardless of your pie's target allocations. It turbocharges the growth of your strongest performers. Add to your cash balance. This is M1's default. The dividend gets pooled with any new deposits and is then automatically invested according to your dynamic rebalancing settings. This second option is particularly powerful for long-term investors. Dynamic rebalancing ensures your dividends and new cash flow into the most underweight slices of your pie. If your target is 50% in one stock and 50% in another, and one lags, the dividend cash flows to the lagging asset to bring your pie back to your original target. This forces you to buy low and maintain your desired diversification, a crucial yet often overlooked long-term strategy. A strategy for life. M1 is designed for the investor who wants to set a strategy and stick to it without the emotional, day-to-day trading. For the long-term dividend investor, this automation and focus on target allocation means consistency. You are consistently buying more shares, maximizing the compounding effect. Discipline. The platform enforces your strategy, automatically directing funds where they're most needed. Simplicity. Once your pie is set, your main job is simply adding cash. If your goal is to build a massive, passive income stream that grows without your constant attention, M1 structure, fractional shares, and automation are exactly what you need. With that said, thanks for watching, and until next time.